with all the updates from the FNO universe and what the derivatives action is up to right now. Ansh, take it away.
Well, markets are holding steady at higher level. Nifty has hit its 4-week high level but is currently trading flat as investors are taking a breather after previous sessions up move. Meanwhile, if you talk about index options, then we are seeing most active put writing happening at the 23,700 mark, indicating option traders are expecting Nifty to sustain above this level. Whereas if you talk about Nifty Bank, then that has also scaled to a 4-week high level, comfortably sustaining above its previous session high. Also in index future, we are seeing open interest has gone up by around 0.5, 0.6%, indicating good long build up. Now, if we talk about stocks that are in focus, then Angel One is the one which is in spotlight after posting better than expected January business update. Also, if we check its stock futures, then we are seeing open interest has gone up by around 4%, indicating long build up. On the other hand, Asian Paints is under pressure as on the back of its weak management commentary. Also, Goldman Sachs has come up with a report suggesting a sell rating here with a target price of around 2,275 rupees. Also, if we check the stock future of this stock, then we are seeing open interest has gone up by around 8%, indicating very significant short build-up. So keep an eye on the stocks.
All right, Anj, thank you so much for joining us with all the stocks that are in focus in the FNOverse. But let's get on board Sachin Shah, fund manager of MK Investment Managers, who's joining us now to weigh in on the markets. Hi, thank you so much, Mr. Shah, for joining us. Good afternoon to you.
Hi, thank you. Thank you for having me on your show.
Mr. Shah, right off the bat, then, it's been 5 days since the budget came out, and since then, markets have been in good stead. In fact, it was a very consumption-led budget, especially, the tax exemption for, people with income of 12 lakh rupees per annum. With that, how do you see the consumption boost coming in? And as I can see in your holdings, I don't see any major, consumption FMCG name in your holdings. Time for a portfolio rejig, perhaps, given the valuation comfort as well?
Yeah, sure. So, firstly on the budget. So, I personally feel that, this taxation slabs that have been changed. I think it's a very transformational thing. It's structurally extremely positive because if you think about it today, an annual income of up to rupees 20 to 25 lakh rupees annually will have an effective tax rate of just about 10 to 12.5%. And that's to my mind, it's very, very palatable with most of the people. So they will actually pay, they will actually start disclosing full income. Today, there are less than probably 4 crore people who are paying taxes. This number can actually multiply and probably become 10 crore plus people in a very short time of maybe just about 5 to 7 years. So I think structurally this is very positive. And to add to this, if you think about it, there are double incomes in a household. So, at an annual income of almost 40 to 50 lakhs, you will just have an effective tax rate of anywhere between 10 to 12.5%. So that will have a tremendous amount of positive, effect. So that's one. Second, in terms of the consumption, I think to your point, to our mind, this actually will actually lead to a lot of discretionary spending. And from that perspective, I think autos as a space we believe will gain one of the most thanks to this budget and thanks to the tax savings that the individual investors or they will have. So I think we have a very decent allocation to auto, and we believe that should be one of the big beneficiaries.
Okay, Mr. Shah, point taken. This is Snehi also joining in. You say autos are going to be a big beneficiary, but give us a lowdown, give us your sense on other sectors as well. Because you had the likes of capex related stocks, you had defense, infra, you had railways that were in focus in the budget. Some good, some bad takeaways for all of these sectors. What are you making of these sectors and how are you positioned when it comes to all of these sectors?
Well, actually, we don't have too much of, at least in our flagship PMS and the AIF strategy capital builder, we don't have too much of exposure to most of these sectors. We are largely focused on the private sector banking, and we clearly believe some of the leaders will do much better as we go ahead. I think markets are already, the results were very good for some of these, large leaders as far as the private sector banking is concerned. Autos, I already mentioned, I think they should do quite well. Even IT stocks, we believe should do much better. They will also have some benefit of the currency. and US economy bouncing back very strongly. That's the expectation because of the confidence that the US Inc. Corporate leaders have at this point in time. So I think some of the, and of course pharma, we believe that in terms of the pharma, we have very decent allocation to the CDMO CRAMS space, and we believe that business should also do quite well. So these are three or four secular sectors where we have very decent exposure, and we feel we are in a good position at this point in time to deliver decent returns.
Right, Mr. Shah, I can see that Zomato is one of your top holdings. I mean, what do you make of this space? Because this is one space that is absolutely hot and perhaps also very, very competitive. Because we saw the results coming out for Zomato, and clearly there was a miss as far as the profitability was concerned on the back of the competitive intensity. And now, should Zepto also list on the stock exchanges, that's going to just eat into it's already eating into Zomato and Swiggy's market share. What do you make of this space as of now? How bullish are you on Zomato going forward?
Yeah, so we've been owners of Zomato for now more than 2 years, and we still believe that it has long legs. Two things is that one is, of course, the entire food delivery space, and of course, and also the quick delivery space, which is what the Blinkit is part of Zomato. I think both these businesses are in a very, very strong position. I'm not sure if they're losing market share, as you mentioned. My sense is both of them are either gaining or holding on to the market share, and Blinkit is at a very, very high distance from the next competitor as far as the market share is concerned. Also, in terms of the miss of the profitability as far as Blinkit is concerned in this current quarter, from whatever we could read the results, it's more to do with the a very accelerated expansion of new stores. So what they were planning to do in the entire calendar year 26, I think they would do it in calendar year 25 itself, and that's that acceleration which sometimes brings uploaded or upfront cost, which is probably the reason why there has been some miss in terms of the profitability. But if you look at the growth of the business, if you look at some of their gross margins or those kind of things, I think they are actually on a very, very strong footing. Most important thing is that this entire sector has a tremendous amount of tailwind because the consumers have completely embraced this sector, if I can use that word. They have gone beyond acceptance. They are actually completely embraced. So wherever consumers queue up, we generally tend to see that businesses grow very fast, and market leaders like Zomato and Blinkit tend to have a disproportionate share as far as the profit pool is concerned, and that is something what we believe should play out over the next probably 12 to 24 months.
Okay, thanks, Mr. Shah, for joining us. And on that note, we'll have to let you go. Thanks for sharing your stock specific, sector specific, as well as your market
Thank
views
you.
going ahead. But on that note, let me also take it across to my colleague Gaurav, who's waiting by with a list of all the stocks that are worth